If you've been trading meme coins and you're looking for that breakthrough, you're trying to profit, you keep getting rugged, bundled, every time you buy it goes down, every time you sell it goes up, I'm gonna show you exactly how you can consistently stay profitable in the meme coin markets. Myself and my community have been printing 10K days, 20K days, upwards 50K in a single trade. I'm gonna give you kind of a framework that would automatically up your win rate at least by 50%. Let's get into it. How to actually trade memes without getting destroyed. And I'm gonna run through this. I don't want to drag this along. A lot of this is straightforward, but a lot of you guys need to hear this. Now, let's talk about the port size reality. The port size reality is important. I always said this, and I'm gonna reiterate this, especially now because there's this big trend of turn 1 SOL to 100 SOL challenge. People are gravitating towards that. I know the masses are gonna want to see stuff like that, and it's cool, don't get me wrong. Maybe I'll do something like that for fun or for a challenge or just to show people what's possible, you know, for content. That's one thing. But if you really want to make money in this market, you can't be a broke boy. Let's be serious. If you're a brokey, you should hop off of this video right now and apply to McDonald's. And I'm so serious. And that's not even a slight. That's so serious. Your mental is not going to be able to trade calmly the way you're supposed to trade, disciplined the way you're supposed to trade, if you have no type of income. You have to have an active income before trading can take over and become your full-time income. You have to have some sort of security first. Get a side hustle, do Lyft, Uber, whatever it is you got to do. But if you can't even put 5 SOL into an account that you're risking, by the way, that you'd be okay with if it went straight to 0, because there are tuition fees, maybe it's a learning curve, then you're not ready. You shouldn't be on this side of YouTube right now.
This is the end.
All right, so 5 to 10 SOLs more ideal, because with proper risk management, I'm gonna show you how you can turn up, right? Like the results I showed you in the beginning, and I'll show you more. But I just want to get that out the way. Now, if you don't have money, you can still trade and you can still learn and you can still have fun. But you got to get to a point where you can risk 5 SOL to learn and put in 10 SOL into account and not sweat it. That's the only way you're going to get good, and that's the only way you're going to be able to build on the knowledge that I'm putting out here. Now, once you get to that point, position sizing. If you do got a 5 SOL port, I usually say 10 to 15% of your port per position. That's how much you're going to risk. Okay, if you got a 10 SOL port, you want to risk 1 SOL to 2 SOL max, or 1.5 SOL max, because you can lose 5 trades in a row and it just takes one good banger to 2x the whole port even still. So 25 SOL, 2 to 5 SOL max if you got high conviction. That's how you're gonna do it. The key rule is never more than 15% of your port on one given trade. Okay, and I'm gonna show you exactly what I mean because it's a little bit more nuanced. The idea is this: on a 10 SOL port, if you find a good play over 100K market cap, like I'm about to teach you guys, you can put 5 SOL in one trade as long as you're only risking 1 SOL. Does that make sense? And I'm gonna give you the framework to where you don't even have to lose a whole SOL, because it's a lot of nuance to it. I teach this in my community, but if you have high conviction in the play, you could put 5 SOL with a 10 SOL port. As long as you screen it and there's no bundles, you screen it and there's no wallet farming going on. Now I'm gonna explain what all of this means. The narrative is strong. Distro looks good. You could put a healthy stop loss and you can aim for a clean 2, 3, 5x and build on that port back to back. With a 10 SOL port, you could automatically double your whole port on 2, 3 trades when you play it like that. That's the nuance that a lot of people don't teach, but it's important. And I'll show you guys exactly what I mean with some of the tools that we use. Now, 2, psychology. This is huge, family. Why? Because the mindset that works is you gotta believe that the money's already gone. Once you put that 10 SOL in the account, 5 SOL in the account, and don't get me wrong, like I said, if you're brand new, start with a small amount, 1 SOL, 2 SOL, get your feet wet. And if you got less than that's all you got, sure, but you got to be way more disciplined. But the money's already gone. Your job is to survive. Cut your losses, let your winners ride. Easier said than done, but the money's already gone. And if you lose it, that's tuition. You got to be in here for the long run. I had people come into my group, lose $200 and throw the towel. And I just laugh.
I don't even think you really know what a bad day is. But you're gonna find out.
First of all, you're a psychopath if you're on this video, just like me. You're not looking at TradFi. You're not looking at stocks. You're not even looking at majors. Crypto majors is already the most volatile, crazy sector of finance. But in the craziest, most volatile sector of finance, you find the most craziest, volatile sector of that sector, which is attention markets, meme coins. You're a psychopath. You like a thrill. You like the ridiculousness of this. But you also see the potential. You see people 19, 20 years old making $1 million a month, even in these conditions. It's crazy. Now, to think that you're going to come in and have edge your first month, you think you're going to come in and catch 100x your first month? Guys, Twitter is not real. You're on Twitter probably comparing other people's P&Ls and this guy went from 1 soul to a millionaire or whatever the fuck. But at the end of the day, you need edge. It takes time to build edge. You need discipline. It takes time to build discipline. You need to understand narratives, crypto culture. It's a whole thing. So understand, there may be tuitions that you have to pay. So the money's already gone. And once you let that go, you'll be able to thrive. It's like a paradox. There's 3 emotions that you're going to have to destroy. Let's start with FOMO, fear of missing out, especially for you guys that are in like these alpha groups or you're on these Telegram channels of these callers. The best thing that you could do for yourself right now to become a better trader is to think independently. Now, what does that mean? Get out of all of that for a season, for the next week or 2. Just learn the things that I'm teaching you. Use the free course that I'm giving you guys. Like trade on your own, figure out narratives or like with a community and bounce ideas off of people, like actual independent logic, not just going off of callers, seeing this person 10x on a trade and say it's going to go to $1 billion. So you get in at the top and now your exit liquidity, like that's very beginner type of stuff. Following any KOL, I don't care how much you think he's God. Do not put any one of these KOLs on a pedestal. Most of these guys don't even show their face. Most of these guys are cartoon characters or they come on YouTube and they got a mask on and like, bro, and you worship these guys. At a certain point, you'll know who's good traders. You'll know what's good signal, but you got to think for yourself. So I say that to say this. You're on Telegram. You're seeing people post, oh, look, I just sent a 10X. I call this at mil market cap. It's at 50 mil now. And now you're chasing candles. You're getting in late. When everybody's getting out, you're jumping in. And you're going to get wrecked this way. You're going to get wrecked. Again, I'm going to show you very specific examples as we go on. But if you made it this far in this video, you already know what I'm talking about. So how do you fix that? Get out of the Telegrams. Get out of the groups that are very, very noisy. If you're going to go in those groups, you're going to go in those groups and add value. Give your own takes, your own theses, find your own positions, your own entries, and bounce ideas that way, not just consuming all of this information on X. You're seeing all these calls. You're seeing all these KOLs give alpha. They already have a bunch of supply before they called it. They're already up 2-3X on the trade before you even got in, before you even saw that they called it. So you got to understand that. You got to be able to sit out of markets that don't make total sense to you as well. If it doesn't make total sense to you, you don't feel it in your balls, you're going to learn that tingly feeling inside of your balls that you feel when there's a runner and it just makes sense. And you can't even believe that everybody else isn't talking about it yet. And it's low and it's accumulating and you got a chance to get in. And then you take that position and you hold and you have conviction and you're not scared, you're not worried because you know everybody's about to catch on and it runs up crazy. You probably felt this before, you probably done it before. Those are the only times where you should be getting in trades. And it's really hard to filter out the noise because sometimes it might be a meta you don't completely understand. There's some metas that I just sit out of. I just don't like it. There's sometimes there's PvP and it just don't make sense and I'm just like, man, I'm not participating in this. I don't feel like donating to these random devs on docs, hide their face. I'm not doing all of that. You got to understand that the goal is to not catch every runner, but it's to be fully focused and clear when one appears. So if you're busy trying to chase and understand a meta that you don't even like or understand or it just doesn't fit, you're going to get wrecked. And then on top of that, when something that you could have been ready for and clear and focused and streamlined for, you're not going to be ready for. Because you wasted your mental capacity on some bullshit. You don't want to be that person. Accept missed opportunities. Don't chase tops. Buy at the lows. Wait for the lows. This is Memecoins. This is the most volatile market. And I'm going to show you technicals. I'm going to show you charts. But mindset is so important. Mindset comes first. You got to understand. There's structural highs and there's structural lows. Like meme coins, they'll run up 10x, but then they'll drop 80% before they go up again. You know this. Wait for the best possible entry. It's going to take discipline. You are going to miss some. Sometimes things are going to go without you, but it's okay. You want to become a risk mitigator. What do? You mitigate risk. What does that mean? You lose less. You train yourself to just lose the minimum amount possible on any given setup. And you only trade when the best possible risk to reward setup is there for you. You only trade when you can only lose a little bit and make a lot. That's the only times you get into a trade. Pretty much the opposite of FOMO. But it's hard to get over those emotions. Because me, I personally have ADHD like a motherfucker. And the thing is, if I'm sitting there in the trenches all day, like trying to scan and like catch like a 5K market cap, like it messes with my brain. It's like, it's too much dopamine. It's like, you guys, are you in here for the dopamine or you're in here to make money? Slow down. I'm not the type of person who wants to sit on my screen all day and just watch charts and like gamble in a sense. Don't be that person. You only need a handful of trades in an entire month to go crazy, right? And I'm gonna prove it. Revenge trading. 2 losses, you're done for the day. Emotional discipline is key. Don't chase the next runner after you lost. If you already hit your threshold for the day, that's it. GG's. You wasted it. And maybe not 2 losses, but like whatever your threshold is. Maybe it's 2 sold, 1 sold. The runner might come right when you finish, but that's it. You can't go chasing that. You already proved that you have pretty bad judgment. You couldn't wait for the runner. That means you're not in tune. So don't chase the next runner. 2, don't increase size to try to make it back. Stick to the same risk management every single time throughout. Okay? It can be relative to your port size, and it should be relative to your port size. But once you start increasing your size to try to make more back, you increase your risk. And again, the whole name of the game is mitigating risk, making your risk less and less and your wins more and more. That's the only job that you have. Now, every emotional decision reduces clarity. The hard stop is for a reason. It's scientific. Because as soon as you start making emotional trades, oversizing, chasing the next one, maybe you get PVP'd, and then you jump into the other PVP with more size to try to make it back. Now they dumped that one. You get into the OG because you see the OG is sending now and you just lost your position. You got shaken out. Like, this is all just like an emotional spiral. This is called going on tilt. You don't want to go on tilt, not with your money. And if you don't listen to me now, the trenches will teach you.
Halfway to TP. Halfway to TP. Halfway to TP.
Dude, this thing better go back to where we just were. Alright, please, just get back up to VWAP. Just $200, I'll get out. Alright, I'm done being greedy. Please just get me back to break even, please.
Please, God bless this trade. Please, just bring me back bring me back $100 loss, I'll get out. I'll take an $100 loss. Just please, God, bring this up just a little bit.
Dude, I can't lose $700. That's my rent money, dude. I gotta take my stop loss off. I just got auto-liquidated. The account's gone. That's it.
Stupid.
Survival is more important than winning. You want to survive in this market. It's better to not trade today. If you're feeling any type of tilt, it's better to not trade than to lose. There's another side to it. What do you do when you are in profit? You don't want to marry your bags. Memes are momentum assets. It's attention markets. It's not investments. This isn't something for you to just hold to zero and DCA yourself into death. Dollar cost average, like keep buying in on every dip because of your conviction. Again, when you do things like that, you're not mitigating risk, you're increasing risk and you're decreasing your gain. The whole name of the game is to mitigate risk so that you can win more. Now, you want to have conviction in your bags. You do due diligence. You understand the narrative completely, and that's what's going to give you conviction. You have independent thought. You have an independent understanding. You don't want to borrow conviction just because I said it, just because another trader got in that you're tracking. Those are all signal. Don't get me wrong. If you have signal, that's good, but it's your independent thinking that's going to get you far in this game because everybody's port is different. Everybody's entry is different. Everybody's risk management is different depending on your port or whatever the case is. So maybe you shouldn't be top blasting even if you have conviction. If you see another trader do it, that's his conviction. You trade according to your plan because otherwise you'll get attached. You don't want to get attached to any given trade. That's called marrying your bags because you'll just get stuck in it. You'll become a community member. You top blast, but it is a great narrative. You know it's going to go hard or whatever the case is. You could have waited for the dip. You didn't. And now you're just stuck in a trade. You don't want to take the loss. You're stuck in a trade. You're waiting for the next catalyst, waiting for updates on the community. It's like all these external factors you're waiting on to pump your bags, but all you had to do was control yourself from the beginning and you wouldn't have to wait on any external circumstance. You don't want to put yourself in a position where you're like freaking out over a trade. So you want to look at those things. Is there attention on that coin? That's going to give you conviction. And why is there attention? Is the attention going to hold? Is it just some fleeting trend? Or is it something that's a cult brewing? Like, what type of attention is it? What is that narrative? And what's the next catalyst? Okay, like what is going to happen next? Are more corporations going to post about it? Is certain KOLs going to post about it? Are you early? Is it a wave that's just going crazy? And I'm going to give you guys examples again, but you got to know this yourself. What is the volume on that coin? Do you see buyers? Do you see holder count going up, or is it dwindling down? Because maybe it's a good narrative, but it's dwindling down. You could wait for entry. Maybe it's a good narrative and volume is really hot, and you could get in on the next dip. Those are two different things. Now, what happens when you're in a trade? You got in at a good point. A lot of traders make this mistake. Even in my community, we have people make life-changing money, hundreds of thousands, but they don't take P because it could go higher, because a billion, because a certain KOL. And that conviction is good though, because I mean, to even get to that point, you need to have conviction, but that's where the lines blur into attachment. You got to understand, greed is not patience. Don't mistake greed for patience. Oh, I'm just being patient. It's going to go up higher. No, you don't need to sell the top to win in this game. You just need to sell. And it's hard because this is what's called euphoria. You feel this feeling of just like it's going to go up forever when you're in a trade. You're up 10x, maybe it could go up another 10x. Then what? Once you start feeling those feelings and you start sharing P&Ls and you start bragging about it, that's usually a signal that you're in a euphoric phase. Start clipping, okay? Get out of the trade. Now, 3, narratives and execution. This is going to be good because a lot of you guys don't know this. Lock in on terminal. This is where you're going to find the most edge. Those are like the filters that I gave you. 5 token types that you want to pay attention to. I only have 4 here, but there's 5. Tweet coins. You want to avoid these. These are just like you go on terminal and you see something migrate or is about to bond and it's just a tweet. Now, there are times where it could be, if it's tied to a viral trend, which is a completely different thing, like a meme and everybody's posting it, that type of stuff is different because those are explosive. But if it's just a tweet, oh, Elon Musk changed his PFP, they don't do what they used to do. Like tweet coins, even if they do go crazy and you're not early, there's no new catalyst after that. It's usually done. You want a real narrative. Utility coins, for the most part, stay away from it. People LARP. Pump Fund just did this whole thing where they're giving out creator fees to GitHub repos. Now, that's interesting and that's cool, but nobody cares. Like Web2 developers aren't really, like they don't care about Web3. Sharing fees with random people, like it might be a meta. Make some money if it's part of the meta, sure. But don't get attached, especially to stuff like that. Grab your 2-3x, get the hell out. Viral trends. This is like Rabbit, the Roam Rabbit. This is like OpenClaw right now. I just called that in the group. That's like a 10x right now. OpenClaw. It's explosive, but it's fleeting because once the trend starts dying, you want to just be aware. Now, don't get me wrong. OpenClaw is a little bit different. This is like the biggest trend in AI right now. AI is like taking over the world as we speak. So that's a very strong trend. But then there's like TikTok trends. Things like Kirk. It's already died down a lot. Why? Because these Epstein files came out and now everybody's talking about Epstein. So what's the trend now? You want to find memes according to that trend. And then when that dies out, it'll be something else. This is attention market. So you don't want to get too tied. You don't want to get too attached to any given trend. But then there's the next one, which is community coins. And the one I left out is gambles. But we're not going to talk about that because that's not going to be conducive to your edge. Community coins are cults. This is where the money is. I called this one in my group just recently. This is Buckcoin. And it's going crazy while Bitcoin is dumping. We're going nuts in Buckcoin. It's just ridiculous. The creator who created Buckcoin years ago, it's a lot of lore to it. What you want to do is when you're scanning, check out the X page and figure out what the actual lore is. So you can see here, Barry Owners is the original creator of Buckcoin that he made 15 years ago. You guys got to find the YouTube and the Reddit. It's all documented. It's like one of the first real meme coins. And they tokenized it on Solana. That's pretty big. With the creator supporting it, it's on Pump Fund. Every KOL's in. It's massive. So we call this, and we was looking at the curl. When you see coins run up ferociously like this is why we don't chase coins. We wait for it to go down and start to curl, and then we find our entries. And you could see, gave the whole breakdown, gave the whole meta exactly what it is. So that's the power of just being in the right groups. But you need to be able to do this yourself as well. Whatever group you're in, it doesn't have to be Rage. Whether you're in Potion, Shocked, Pastel, your own group, give value. Give your own theses. That's what's going to build your muscle. Give your own entries as well. Find the lowest possible entry and then execute on it. Do that enough times, you're going to start to find your edge. You're going to see what works, what doesn't work. Now, pre-buy checklists. This is important, especially if you're going to be in the trenches in any type of way, meaning coins that are about to migrate and just migrated. Because my favorite thing to do is just be on Deck Screener and just look at coins and just do research on every single one. That's always just kind of been my method. Why? Because Deck Screener is going to show you what's trending, what's already migrated. You're not so much worried about bundles and bad actors, because usually by the time it's trending up and moving at that direction, bundles are usually out. Now, that's not always the case, and I'm going to show you good edge on how to differentiate what's a bundle, what's not a bundle, where there's bad actors, where there's not bad actors. This is very important because a lot of people get wrecked because they don't know the difference. And there are ways. In my past videos, I teach you guys how to do all of this manually. Even in my course, I teach you how to look on chain, how to see if wallets are locked on chain, on SoulScan, how to see if people are transferring funds, where they're going to. You could look at the top holders. You've probably seen this method. You could look at top holders, kind of look at how many of them are bundled, how many fresh wallets. Terminal gives you that. It'll show you the fresh wallets. It'll give you percentages. Now, if you're really on chain, you do know a lot of these numbers are skewed. They're not always accurate. Your P&Ls here are not always accurate. But what is the method? So like if you look, you could look at similar balances in the top holders. You want to look for similar funding wallets or centralized exchanges here. And if any of them are funded around the same time, because that's how you could go undetected as a bundle, but you're still farming. So there's all these creative ways that deployers are bundling coins now. So what I did was I made a tool. This tool tells you exactly what's going on chain. Automatically tells you about wallet farms. It automatically tells you real bundles, the true bundles, insiders, everything. This is important if you're going to be trenching and you want earlier plays. Again, if you're new, the best thing you could do is take it slower, because you'll probably get wrecked, and go from higher cap plays. Over 100K, but's been holding over an hour long at least. Like, those are the things you kind of want to look for. But if you want to go into the rabbit hole, you want to get things earlier, well, then I created this AI tool that's going to show you exactly the bundles or whatever. So like, check this out. So for example, you see this cat coin. So it's showing fresh wallets, insiders at 30%, bundles at 2%, no farms. Let's look at the community, see what's going on here. Cat coin, first ever cat coin concept in response to Dogecoin. Hey guys, thanks for bringing my idea back to life. Back in the day, I figured this was something that community needed, something to inspire, rightfully in place for the next Doge. Interesting. Cat themed coin. This is the first cat themed coin. So this is like a butt coin type of narrative. OG, creators on board, the whole thing. That's interesting. And then they got documentation of it. Interesting. So you see this old blog post. So let's just go look on Soldrum. So we go to Solstice AI. Now this is all AI research, and it's just going to tell you exactly what's bundled, what's linked, where's their supply locked. Everything that you'll need to sleuth on chain for, you no longer need to sleuth on chain. Only thing I would say, it's more in depth. It's actually going through the entire blockchain to give you this information. So it takes a few seconds. Now, what it also does, it fetches if there's whales in that trade, which is really big signal for you to hold or not, if it's at a good entry. You can see here, what is this whale? 21K in Crust, 14K in Mia, 11K in Larry, 11K. That's a pretty, okay, this is a pretty fat whale, 100K in just tokens. Now, you can see the safety check is a little bit fishy because there's linked wallets. This is what you call a wallet farm. So now, again, you can do all the work, don't get me wrong, do it manually. Like, that's better for you to actually learn the chain. But at a certain point, you need speed, you need edge, you just need to see these things quick. You want to be careful with linked wallets on low market cap. 10% is a lot. 10% is more than the whole LP pool, as you see here. So you see the pump fund pool holds 10%. And this just shows you everything on chain. This is the accurate information. So with 10% linked wallets, is that something that you really want to get in? You want to be careful. Now, there are good cabals and there are bad cabals. You got to be able to distinguish the difference. Now, on a coin like this, I wouldn't get in on green candles. I'll get in as low as I can get if I'm going to take a stab at it. Because in this instance, let's be real, the narrative does check out. It is a pretty good narrative. It is on meta because Buckcoin went crazy for the same type of narrative. This would be a beta, though. It wouldn't be alpha for sure. So you wouldn't expect tens of millions, maybe 1-2 million, if that. But a coin like this, you get in on the floor, 5-10x, you're good. But you're not top blasting. You're not doing nothing out of scope, especially when you see linked wallets. 4+ linked wallets is still very low liquidity. We count liquidity on this research tool of what actually can come out of the coin, not that inflated TVL bullshit where it's like it'll show you probably, let's see what it shows here. Yeah, it shows 30k liquidity. That's because they count token amount and SOL amount, what can actually be pulled out. So you want to look at all these things, what's actually in the LP and how much of it is bundled. That's all very important because now you understand why I'm so strict on mitigating risk, because getting in any meme coin is already a huge risk. So there's so many factors you got to look into. Okay, so I do have holder scan here that shows you all the holder scan numbers, distribution, as we went over. I'll do a whole nother video. If you guys like this tool, you want me to do a full breakdown, I'll do a full breakdown, but that's not what this video is about. But understanding all of these things. And you guys can see, the first thing I did was click on the Twitter and see what the narrative was about. You can see over here, it pulls X analysis automatically. So it'll tell you the main narrative with AI automatically and take you straight to it. Having tools like that is a huge, huge help. But if you don't have the tools, then what you can do is learn on chain. Just do the extra work. Take the extra 30 seconds to look through top holders, find similar funding. If you see a bunch of bundles, like you see a bunch of and I'll show you, once you start seeing a bunch of coins, a bunch of holders with similar amounts, low amounts like this, that's a farm. That's a bundle. Once you start seeing all of those things, it becomes clearer and clearer. And this is why I say stick towards higher market cap plays, because the higher the market cap, it dilutes all of that because all these guys sold out already. They're not holding all the way to mils. They sell out, and they usually sell out at a few 100K market cap, right? Within usually the first day or two. After that, if it's still holding up, you're not going to see much of this, which is why it's more important to look for bottomed out plays that are down 80% and just catch a nice 5x, 10x, and more depending on the narrative. But even just 2-3x's in the beginning as you build your port and your confidence, that's important. Now, I am giving access, by the way, to this. You guys can get free trials, souljournal.app. I'll put it in the description so you guys can try it out. It's an expensive tool to upkeep. I made this specifically for my private group. Everybody in my inner circle has access to this. It's a lot more than just this research tool, but I'm just now about to give it to the public so you guys could try it out. You need a pre-buy checklist. You need to know what you're looking for. If you're just getting in only on narrative and not understanding technicals or not understanding chain, on chain, you're going to get wiped every time and not understand why. When will you learn? You're in the riskiest sector of crypto, which is attention markets, and you don't even understand the risk. Come on. So next thing that you want to understand is the narrative hierarchy. What does that mean? Understanding the meta. What is the overall theme of the markets? That's how you're going to have the best edge. Again, I just broke down Epstein. I just broke down OpenClaw. There's always going to be metas and maybe some sub metas, but you want to make sure you're trading on meta. It's always best when it's a fresh meta. You'll see back-to-back 5 mil, 10 mil, 100 mil runners on a fresh meta. But then there's Memecoins. It's very cyclical. There will be maybe a week where there's no real meta. It's good plays, maybe trends here and there. If you catch them, you catch them. But you want to be looking for alpha. And that's usually when a new meta appears. It's the one that creates that whole wave. So for example, OpenClaw, when OpenClaw first dropped, it was called ClawdBot. In our inner circle, we found that early. Boom, we jumped in, ran it up. And then there was a whole bunch of other bots and different things. You want to be in the alpha though. So then what would be a beta? Actually, I'll show you real examples. I took screenshots. So Gas, this started a crazy meta with this whole AI stuff going on. So this developer, very well known, created Gas. Gas is pretty much just an ecosystem of AI agents that help each other so people can make projects faster. That's pretty much all it is, but it was groundbreaking. In AI, it's a big meta. So what did we do? We saw an article that he put out. The article was gaining a lot of attention and he was referencing meme coins because they tokenized his idea and was able to generate a lot of money in a short period amount of time. So it was groundbreaking. So you see here, I talk about it. I talk about the article. I talk about a lot of stuff that we talk about on our calls. because we were already looking for this play, because when you're scanning all day, you kind of have an idea of what's going to come next. We were already looking for this. So when it came right in front of us, boom, we knew it was alpha. We knew it was on Meta because we were watching Claude. We was watching all of these AI stuff happen in real time. So we were just waiting. And then boom, we was able to call it. And I called it for just under 5 mil actually, but it started sending like crazy. Now you see here, crazy come up. Now what's a beta for that? A beta for that would be something like EVA. EVA was something, it wasn't alpha because alpha was more gas. Alpha was more Claude, the Claude bot making a crazy wave. Now, what EVA was, it was pretty much a Claude bot, reputable dev, and he made it with a narrative to be the first bot to hit $1 billion on its own, agentic, no help from humans. And he advertised it as being way better than Claude bot. And this was a really good beta because at the time, this dev already had $1 million runners under his belt. We did the research on the guy. Let's see if he pops up here. Actually, I'll just show you what I said in real time. How about that? So I sent this pretty low and I talk about it. Similar narrative to Claudebot. Was watching the first wave up, completely missed the dip. I saw it way earlier, guys. I saw this at like 300K and just forgot about it, which is why you have to have your alert set. You do that on terminal. I teach you guys in my course, but I'm not going to go over that right now. And you want to just keep an eye on things that ran up and look for those bottoms. Don't forget about them because that's where the money is. Don't always chase the new thing, new thing, new thing. A lot of times, next 10x is something you already scanned yesterday and it's bottomed out and it's ready to take off. So I break it down here too. It's a different version of Claude, much more powerful and may gain attention, especially if done in a similar fashion the way Claude on ETH is. That was another one that we scanned that went pretty explosive. Okay, like you guys get the point now. I'm not trying to flex, but it just is what it is. We call alpha. Now, I'm teaching you right now how to find your own alpha. So you don't have to pay for groups. You don't have to pay for anything. This is how we do it. I'm literally not holding back. So on EVA, we knew that he was going to set up the bot, or I knew, or this is what we were speculating on. What's the next catalyst? Yes, it's a beta play, but it's still low, and there was still a huge catalyst that didn't happen yet. The bot wasn't even live yet. So we knew once the bot was live and it starts gaining attention, GG's. That's it. And you can see we ran it up 12K on a play. One of our members, 7K on a play. More people made, I should have did the group P&L. A lot of people made money off of this play, but you get the point. Liquid, another one. Oh, and you know what? Before I go there, look, I want to make something very clear as well. Why we take profit, why you don't marry your bags. Look at where it's at now. This is attention markets. We were in early enough. We got our P. And don't get me wrong, even if it went to 10, 20, 30 mil, it's like, can't be too greedy. You made 7K off a play, 10K off a play. Like, chill, bro. Chill. And wherever you're at, maybe it's $100, $200, $500 on a play. You could have put $50 on this same play that I gave out, $50, and you would have been up $150, $200 on your first trade, for example. Take the P. Don't get greedy. Don't marry the bag. Everybody's always going to say this is the next peanut. This is the next chill guy. This is the next goat, whatever. Man, forget all that. Don't try to time the top. Take your money. Do something with it. It's not real until it hits your bank account. It's only numbers on a screen until it hits your bank account. Now, making money in this way definitely skewed my perception on money. I'll tell you that. I started treating money like it wasn't real. Like it couldn't pay my rent or something. $1,000, who cares? And I'll start round trip or like doing stupid things because you lose respect for money. You have to keep your respect for money. You're up 2K, you're up 3K, you're up 300% on your port. And that's a better way to look at it. Not in numbers, but percentages, because it's all relative. Being up 300% on a 10 SOL port and maybe you got in with 5 SOL, you're up 15 Solana. Where Solana is right now, that's over $1,000. You're up $1,000 on one trade, right? And that's only 300%. But 300%, when you build that port up to 100 SOL port with the same type of play, you could risk way less, Steven. Let's say you put 10 SOL on. That's 4x. You're up like 30 SOL. Okay, 3K on one trade, not bad. But it's all relative is what I'm trying to say. So yeah, more profits, more examples. I mean, I don't want to drag this video and just keep showing you examples, but I will. Look, let me just show you one last example. This was a play that TILLA, the owner of Solana, was bull posting. And I saw it at a mil, and we got in at just under a mil, and it was a quick 4x, almost 4x, 3x. I mean, it has to do with some technology. TILLA himself was endorsing and started off, and a team just kind of went and ran with it and tied it to Memecoins. It's basically perps for memes. And anybody can just go ahead and do the research and figure that out. But you see, he's bull posting, he's locked in, they're retweeting a lot of his stuff. They're building. This is going to be something that actually probably could be alpha because they are still building. And it's just accumulating. This is what you want to look for. And obviously you want to pay attention to the narrative and the catalyst. But you can see we called that in our group. Quick little run up, little 2.5x realized. The next thing is entry points. How do you know when to enter? At this point, it's going to sound a little bit repetitive because I did bring this up earlier. But here's a visual. Stop chasing the next brand new thing all the time. As you get better, you can do this and get away with it. If you have edge, you're using the right tools, you're in the right groups, like you can get away with this. But what you really want to do is let the bundlers get their EL. Just don't let it be you. Let the KOLs use their followers as exit liquidity. The faster it goes up, the faster it goes down. You want to slow cook. Let it cook, family. Because that first pump after launch, it's fueled by insiders. It's cabal. I want you to do some homework. Go watch a video on how to rug. Go watch one of these videos. Like everybody's posting them. They're teaching you how to dev. They're showing you the tools to mass create coins. They even show you how to bundle the coins. There's not one coin that gets deployed and isn't bundled. They're all bundled. I want you guys to understand that. So if you're on new pairs, if you're scanning, you got to be real diligent. My advice is just stick to higher market cap plays. And higher market cap is relative. Higher market cap today is like 100K. But holding past an hour, it already went through this phase. You're just looking for this. That's all you're looking for. It already pumped. Distribution is looking good. Cabal is out. Insiders are out. And then you'll start seeing it build a floor. Okay, it builds a floor and then the community starts getting active. Maybe you see you understand the narrative. People are gaining conviction. You get a nice low entry and then you can cook. There are some coins that will be long term. Not often, especially in this market. It's been very rotational, but they are there. We called Buckcoin, for example. That was a very slow cook. You guys seen me do this publicly on this YouTube over and over and over. Go look at my previous videos. You'll see, it's insane. A lot of y'all made profit just off my free stuff. It's just holding. But it's only a handful of those plays that you get. You don't want to marry anything. But if it makes sense and you see a real cult brewing, then you can hold, sure. As long as you're not going in a negative, you're already in positive, you took some profits and let it fly. But you want to see this pattern every single time. Go for higher caps. Don't do the new pair stuff, right? Even scanning on migrated, wait for things to slow down, let people forget about it a little bit, but you watch, you'll see divergence. What does that mean? That means when the volume is just cooking up, but the price is still going down or very low, but the volume is cooking up. And how do you count that? Holders. That's where you want to use something like research tool where we see the holders in real time. You see holders going up, but price is lower. Price is holding up, but insiders are out. Linked wallets are out or very low because in this day and age, a lot of times you got to keep in mind, sometimes teams will bundle up some supply, whether it's a wallet farm or whatever the case is, but that's just supply control, which is different. That's like a good cabal versus a bad cabal. That's more nuanced. I'll go over that on another video or just go through the course. But once you start to see those things line up, holders are going up, the community is going up, they're posting more frequently, the community is bigger at a lower market cap than it was when it went crazy in the beginning. Why? Because the beginning was just hype. Don't chase hype. You don't want to do that. You start to see that signal, then you can run it. Now, where's the entry? When it comes to technicals, I like to look at the 78.6 fib level. That's my signature entry. And I'm going to show you guys why. Let's look at one of the plays that I called. Let's look at gas. Okay. And again, take profits. Don't marry your bags because look at where it's at now. Now, this was a really good call. I called it in my inner circle. I think I called this publicly on X. Follow me on X if you want some alpha here and there. I definitely called it after, but you still would have caught at least 5X. Now, what are you looking for? Why do I say 78.6? Well, this had a lot of volume already. It was going parabolic on X, but I saw the price was low. Divergence. It's going crazy on X, but it's on a strong dip. Why? Because all of these insiders or people who got in at all of these levels were just taking profit. What you want to look for, a nice dip on a 78.6. Now, why 78.6? Everybody knows when it comes to technical analysis, 61.8 is the golden level. Why am I saying 78.6? If you go from swing low to swing high, meme coins are way more volatile. You want way deeper discounts when it comes to meme coins. Way deeper discounts. If you go from the high to the low over here, that's only a 50% discount. But the reason why I took it is because it was on 78.6 and it was a lot of momentum. at this point. And I faded it here because I knew about it, but I waited too long. So I had to wait for a strong dip. I already knew we was in momentum. So it was a little bit different. You're going to see this pattern a lot. Now that I showed you it, you're going to see it a lot. Wait for the 78.6. This works better on established pairs. You need data. If you're looking at a 1 second chart, the fundamentals are the same. Getting in on dips, getting in on discounts, but you 100% want to use this specifically on higher caps. That's where it works best. On coins that are, bro, like over a few hours old, at least. On shitters, it's not going to work as well. But what does work as well on shitters is just finding those accumulations, finding those floors. What is a floor? Look at this. This is a floor. What is a floor? This is a floor. If you got on any of these floors, all you had to do was pay attention. Any of these floors. I made a crazy stack, and that was at the last possible floor. You understand? It's important. And look, it was just vertical. Hockey stick chart. You only need a handful of these in an entire year to be up fat in meme coins. But a lot of you guys don't have the discipline or the patience, which is why you'll never see that happen. You're too busy chasing the new thing. You're too like you're not locked in, scanning, thinking for yourself, getting in at a good entry, and waiting for that tingly feeling. I'm telling you, I felt this in my balls. I sent this in the alpha chat. I was begging everybody to get in this trade. Why? Because it only happens so often. Happens a handful of times and you can't force it. And when it's not happening, you need to be able to sit back, do something else. Go work on your active income, build a business, build a brand. That's why I'm creating content again. You see me here because markets are a little bit slower. I don't want to force plays and stuff like that. We're going to lock in. I'm going to help everybody else do what we do. And it's just on my off time. Why? Markets is a little bit slow right now. I'm not really looking at anything crazy. Like, build something else. You don't got to be locked in all the time. It's a handful of trades. Now, like I said, the golden ratio is 61.8. If it's more momentum or it's like a newer pair, you could probably get in at those levels. 50% dip. It'll be around 61.8, something like that. You might not always get 78.6 on new pairs because it is more momentum in the beginning. But if you are that early anyway, get in on the dip, catch some X's, and get out. But obviously, when it comes to narratives, just remember, just because something's at really low doesn't always mean it's the best thing. You want to make sure you understand the narrative and make sense of the next catalyst. It's something that's going to be trending, and you'll run it up. Last thing, guys, we're coming to a close. I know this is a long video. Shout out to you if you made it this far. I want to say that right now. Shout out to you if you made it this far, because I'm going to work on making quicker videos, but these longer ones is where the sauce is at. And sometimes they run. I think my videos haven't ran like other people because it's long and you actually got to sit through it. I'm not dancing and giving you all these shiny edits every 2 seconds. It's, bro, if you locked in, shout out to you because I know it's a long video. I'm going to work on it. But I'm passionate about this because I think if people were smarter and this niche, like if more people thought independently and wasn't just like tracking wallets or chasing new pairs and just trying to like bundle shit, like we can grow and this whole niche is going to go crazy. I believe in the future of attention markets, but it does take like the right type of attitude towards it. Scaling your port. Now, if you followed every step that I talked about so far, and you're inevitably going to see success. I get DMs all the time on X, on Discord, people in my group, people like for free have completely changed their whole game up. This is going to change your game up. You're going to start becoming more profitable. You're going to start thinking and approaching it a little bit differently. Now, what happens next? I want you guys to remember, it's a compound effect. Just keep doing the same thing consistently. Don't start sizing up. I've had people do this. People join my inner circle. First month in the game, up 15 racks, 20 racks. What do? After that, increase their size like crazy. They don't do the same thing they were doing that got them there. They got a little bit of ahead of themselves and just start aping crazy size and gives it right back to the market. And we have to build it back up slowly and steadily. It always comes back to the same thing, consistency. Because you could get 10 SOL to 20 SOL, then you get 20 SOL to 30 SOL. You don't just go crazier size just because you doubled your port. If anything, you should take your initials out back into the bank with some profits. This isn't a lottery ticket. And if you treat it like a lottery ticket, you're going to get burned. So compound. Every single time that you're up 50%, take some partials. You're up 100%, 200%, take more partials, get fully out, take your profits, and just build it. Build it up. You'll start to build confidence. You'll know when you can hold certain coins. You'll know when to take profits. The whole name of the game, like I said, is risk management. Mitigate your risk. Just cut the losses quicker Try not to see any red and let your winners run. When do you size up? As your port grows, your size grows. You want to use the same percentage per trade. Always think in percentages. It's always going to be the same percentages per trade. The only thing that changes is the dollar amount. So like I said, for example, if you're trading 10% of your port, keep it at that. If you're risking 10% of your port, which is, again, that's nuance. Like, let me show you, for example, another tool that we have here on Soul Journal is a risk calculator. So once you put your wallet in, it'll automatically tell you how much is in your wallet. But let's say you have 10 SOL and you want to risk 10% per trade. Once you have your setup, it's S tier setup. Let's say, for example, we're going to get into, I don't know, liquid. Let's say, for example, like this is the perfect entry. And we're going to put our stop loss below, let's say like under this whole box, under all of this structure, right? Because if you get in here and you lose here, you lose minimal amount. So what you'll do is you'll check my entry is going to be like right around here. Boom. You're going to have a 20% stop loss. So you'll go ahead and put stop loss distance. So you could put a 5 SOL position in that trade, and your maximum loss is only going to be 1 SOL. You only want to do that on trades that fit your narrative and fit your criteria. Obviously, going like your maximum size on a position like that, you want to gauge your risk and how much you're going to size into a trade depending on your conviction. Obviously, on a 10 SOL port, you don't need to put 5 SOL on a trade unless you're super like, this is the one. You know what I mean? Because you want to keep enough money in your port for other opportunities. You want to stay liquid. Now, in this case, you could put it less. Say you put 2.5, 3 SOL. That's more reasonable. And you could keep your risk lower on a coin like that because it is utility. Who knows what could happen? Maybe it dumps even more, and then you could get better entry later, whatever the case is, without freaking out. So now imagine 100 SOL port and you're risking 10% on a trade, 10 SOL. You could go crazy. The dollar amounts change like crazy, but the percentage stay the same. The edge stays the same. This is how you get to asymmetric returns. You want to keep tight stop losses, let your winners run. Again, that's easier said than done, but high conviction trades only. S tier setups only. It takes time. There are going to be days you don't take any trades, but you see everybody hyped up, hyping this, hyping that. Build your own conviction. Don't borrow conviction. That's how you get asymmetrical returns. Now, this is one of the biggest things that you can possibly do. Journal. The only way to find edge is pattern recognition. In my course, I give you guys a free journal, a spreadsheet that I use. This is like an example of it. Sevens in our community, he started with $192. It was about a SOL, and he almost 10x'd it. $1,400 in a day. Now, this is somebody who doesn't come from money. I've seen him locked in the community, sending scans, sending theses, always online, always locked in. He was able to flip his port by journaling and finding his edge, and he's been consistent. He's even been able to flip it into $3,000. This was in the same day, and he says it. Absolutely insane. He just follows the teachings. He says here, thanks for teaching. He hops on every single training. He's been through my entire course multiple times, locked in on the community. So journaling is the only way that you find your pattern recognition. That's where you know what your edge is. You don't want to try to be the next Cupsy. That might not be your style. There's people who can hold. There's people who can't hold. Some of the best traders in the world, specifically in Memecoins, trade the same way I do. Also, some of the best traders in the world trade like Cupsy, just on the screen all day. Look, most meme coin traders don't fail because they don't understand charts or narratives. They fail because they don't understand themselves. And actually, that's what I made Soul Journal for, to help traders find their edge even better. If you look here, Soul Journal, what it does on the journal tab is it automatically pulls in all of your trades. It shows you how much you put in, how much you took out, give your trade a rating, you could add tags, whether it was a scalp, a revenge trade, emotional, did you follow your plan, yes or no, add your notes, your thesis, screenshots, you could run the research. It's a little bit more advanced, but Solstice AI knows your trading style, it knows your rules, it knows how you're trading, it knows the narratives, it knows all your journal entries. So the better that you are with journaling, the better that you will be at finding your edge. Like, for example, if you look at Solstice AI, I taught this agent every single thing about Memecoins. It takes every research that you research and it takes a snapshot. So if you get in that trade, it'll show you kind of where you do good at, where you do bad at. But what it also does is you could feed it any chart. So if you see here, I fed it a chart. I said this looks like a pretty cool narrative. I've seen this meme a lot on Twitter. Do you think is a good chart? What do you think about this? This is what Solstice AI said. I see you haven't traded today. Scouting this chart for potential entry. This looks like a classic pump structure that's already run hard. From what I can see, it's already done a significant move from the base around 12 to where it's trading now. Few red flags. First, you're looking at this after the major move already happened. That's crazy. That's the same thing I would tell myself or my students. The chart shows a parabolic run that's likely attracting FOMO buyers right now. Second, just because you've seen a meme a lot on Twitter doesn't make it a good entry. Now, Solstice AI is funny because it's kind of a asshole sometimes, but sometimes you need that. It says that's actually often a contrarian signal that you're late to the party, which is facts. And it just talks about the risk to reward being poor and everything else. Wait for your S tier setup. This was another example. Somebody in Rage asked this question. So I just asked Solstice AI. Why? Because Solstice AI is going to answer better than I can anyway. It breaks it down perfectly. Anything on chain that you want to know, anything about your edge, daily reviews, it could find your patterns, and there's a whole bunch of other things that I'm not going to get too into right now. But the idea is that you can find your edge just by journaling your trades consistently. So you see it here, 7 did it just on the basic spreadsheet that we give for free in the course. Go and get it yourself. You can use that. You don't have to pay for anything. I mean, the whole point of this whole video is so that you can get all the sauce for free. Obviously, you could pay a premium and get more of a premium experience with AI and all these things, but you don't need that. You could definitely research your own stuff for free. I teach you how. It's all in the course. You can journal your stuff manual. I teach you how. It's 100% doable, and people are getting results with the free stuff. So just put in the work. That's the whole idea here. Put in the work. Rise and grind every day. It's an acronym. That's what RAGE is for. RAGE. Stay locked in. You want to stay liquid. You want to stay alive. Once you start journaling, once you start following these steps that I put here, steps 1 through 4, then you'll start having results like this, right? This is literally just in the past couple days. This is all 2026. 7, still killing it. 3 sold. It's like 200-300 right now. We got my man Fleck in the group. He just had a 50K day, right, on one trade. Trillux got into the same trade. That's like 7-8K, $200 day. Like, no matter where you're at, you can print. So yeah, I hope you guys got some value off of this call. We are all going to make it. Guys, just lock in. Rise and grind every day. Join the course for free in the description. And if you're on another level with this already and you're seeing some type of progress, or you've been doing this a while, you just want to hit that next level, then apply for our inner circle, and we'll see you guys on the other side and in the next video. Peace out, family.